And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show on AM 1170 The Answer. I am your host, Michael Gaddis of FrontierLoanGroup.com. So I was going to originally talk about in this segment the top 10 questions that are asked on the HUD website about reverse mortgages. But there is one thing I want to talk a little bit about first, and that is the name reverse mortgage. The reason that I want to talk about this is because I was just at an event in Long Beach this last weekend, and I had a lady who stopped by, and she told me that it's kind of funny, I'm sorry, she did not like reverse mortgages, that she was considering a home equity conversion mortgage, but not a reverse mortgage. And the reason I chuckle is because they're the same thing, and it's the exact same product. And the reason I think this is because the term reverse mortgage has caused such a negative, it has such a negative connotation to it. It's amazing to me. I could send out a postcard and I could put on it reverse mortgage benefits, this and that. I could send it out to 10,000 people and no one might call me back. But if I take that same exact postcard and I change reverse mortgage to home equity conversion mortgage, people will call because they're interested. It's because in their head they've been implanted with this belief that reverse mortgages are a bad thing. But the benefits of reverse mortgages they like. They just don't like the term reverse mortgage. And I had another lady, she came into my office last week. She was referred from one of my clients. And she was with her husband, and they drove down from Orange County to my office. And they sat in my office, and the husband was like, yeah, I'm ready to learn some more. And the wife looked at me and says, I'm just going to tell you right now that I'm not really, big on this idea, this reverse mortgage thing. I'm not 100% sold. I'm just telling you that right now. And so then I started asking her, I said, well, if I call it a home equity conversion mortgage, would that make you more open-minded? She goes, well, yes, it would. And I said, they're the same thing. And I had to explain to her how a reverse mortgage and a home equity conversion mortgage, also known as a HECM, are the same product. And it's funny how people's brains work and how they think about things. And, in this situation, because of the negative publicity. And, it's funny, as I read through a lot of articles about, hey, be careful, beware of reverse mortgage. And it's interesting to me because a lot of them, it just seems like there's just a lot of misinformation and a lack of education, even from the people who write those articles. And as I'm reading through their reasoning for, beware, reason number one, reason number two, a lot of them are not even valid, or they might be valid, but they're valid for any loan. One of the biggest complaints that people have is, well, seniors who get reverse mortgages or HECMs still have to pay their property taxes and insurance. Well, they have to do that for any loan, right? Even if they don't have a loan, they have to pay their property taxes and insurance. So, but they have this propaganda campaign saying, oh, but the seniors could lose their houses if they don't pay their property taxes and insurance. Well, seniors can lose their house if they don't pay their property taxes and insurance no matter what they have. So, it's just one of those things where that particular piece of information, it scares seniors. But when seniors really look at it and say, well, wait, you've got to pay it no matter what, or you're going to get foreclosed on, then, that kind of brings them more aware. But it's just, when all of these articles state things like that. Another one is, well, if you get a reverse mortgage, the borrower's heirs have to repay the loan. Well, the borrower's heir have to repay the loan no matter what kind of loan they have. If you have a loan, it has to be repaid, not just in a reverse mortgage. It's not like you have a forward mortgage and you have a loan and the forward mortgage just says, okay, you don't have to pay that now. You have to repay the loan. So that's another one of the negatives against reverse mortgages. It just seems like there's a lot of doomsday people, and there's just a lot of negativity around it. And And I just wish that people would, especially the people who are even writing these articles online or that publish these things, would just be more, kind of down the middle, a little bit fair about how they analyze these products. Because, with my clients, one of the things that I always do is I sit down and I educate them on these from A to Z. I tell them things they probably, no one tells them. I break these things down into a very micro level because I try to share my client's experience the same way that I would want it to be portrayed to me. And I'm a person who likes to be fully educated about the product. And it's no matter what product I'm buying. If I'm buying a car, if I'm getting a loan, no matter what it is, I like to know what I'm getting into. And I'm very thorough in that. And as I always tell people, it might be because I'm from Missouri, the show me state. I want to see it in front of me, and I want to understand it. So I make my clients sit there, and I make my clients fully understand. And if they give me that deer in the headlights look, that look, where all of a sudden they have that glossy eye like they're staring at me, but they're really not there, then I'll stop and I'll ask them questions to make sure that they understand. I'll actually quiz them and make sure that they understand what they're getting into. You're listening to the Michael Gaddis Show on AM 1170 The Answer. I am your host, Michael Gaddis of FrontierLoanGroup.com, and we're talking about some of the negativity surrounding reverse mortgages, aka home equity conversion mortgages. And there is some room. I mean, one of the reasons why a lot of people, in the past there was kind of a little bit of a hole with HECMs, and one of the biggest holes that I would tell you about had to do with spouses who were under the age of 62. As you know, reverse mortgage products have to do with borrowers 62 years or older. So before April of last year, if you were married and your spouse was below 62, you could get a reverse mortgage, but your spouse could not be on the reverse mortgage. So that meant that she was basically had none of the benefits or protections that a reverse mortgage had. So that's what happened. Now, as of April of last year, they allow borrowers below the age of 62 to go on to the loan as a non-borrowing spouse. And what that means is that basically if you're under the age of 62, you can be identified at the inception of the loan as being a non-borrowing spouse, and you will be able to stay in the house as long as you live as well. And so I think that's one of the protections that goes in there. To kind of help the non-borrowing spouse. Now, one of the negatives about that is that you have to use the younger person's age. So if you're 80 and your spouse is 60, let's just say, you have to use 60 years old to determine your benefits. So it kind of costs you a little bit, but at least it protects the non-borrowing spouse. So, there's just all of these negativities that go around and these doomsday people, and I still see them despite all of these, and it centers around the same arguments. So anyway, to summarize, don't let the term reverse mortgage scare you away from the product, because it's, as I mentioned, I could just talk about home equity conversion mortgages and your ears would pop up. But when I talk about reverse mortgages, you get all defensive, and it's the same product. So don't let that stop you. And I guess the other thing is, I would say don't rely 100% on what you read on the internet, because what I call the internet is like the tree of knowledge. It's got good and bad, and you can use it however you want to use it. And who knows that the people who are writing articles even actually know what they're talking about. I could write a website about nuclear physics and just start posting a bunch of stuff on nuclear physics, and you might come across my website and you might think I know everything about nuclear physics because I have a fancy website and things like that. But the reality is you have to check the references and find out if what you're reading is actually accurate. And then lastly, I'd say, the biggest thing I would tell people is learn for yourself. Learn for yourself. If you're curious, find somebody who really understands the product, sit down with them and learn it. And then whether it's right for you, at least you'll know what it's about, and you won't rely on people, writing articles and saying things like, well, you have to pay your property taxes and insurance. Well, you have to pay it no matter what, and that's a nonsensical argument. So anyway, and the other thing, right before I go to break, I just want to say is one of the things they added into the HECM product is they have a financial assessment now, which requires seniors and borrowers to undergo a review to make sure that they're able to handle their property tax and insurance payments. So that's what I want to say. So anyway, after Paul's over there indicating that I have to go to break. So anyway, after the break, we're going to come back and I'm going to try to hit those frequently asked questions on the HUD Reverse Mortgage website. You're listening to the Michael Gaddis Show on AM 1170, The Answer.
Well, I'm going to myself. I'm going to the restroom.